Now, if you have never traded reversals before, I'm going to show you today how we trade reversals. So we are looking for a trend and then a change of directions. So we look for a trend where the market forms higher highs and higher lows, so basically an uptrend, and then we suddenly see the market changes more to the side, which means the pushes to the upside become weaker and weaker. So we can then anticipate that at some point the market might reverse and suddenly go to the downside where it forms lower lows and lower highs. So this is what we are looking out for today. So now here in front of me is the British pound and the Canadian dollar, and we can see here the market had here a consolidation pattern, broke above, pulled back here, broke above again, went for a retest, and here we see the market forming higher highs and higher lows. So the market is pushing to the upside, and what we see here is first big move, second big move. So we see these huge big pushes to the upside. We know the market is for now bullish. So we see the market here pulled higher and higher. Here we are forming kind of new highs. The market moves to the upside, but eventually what is happening here, we can see this was a new high, this was a new low, and then here we formed a higher high, but suddenly the market broke the previous low. So now this might be an indicator for the market to go to the downside already. So now we're waiting for a better sign that the market will really reverse the trend and start going to the downside. So here if we zoom in a little bit and then let the market run, we can see here we went again to the upside. After here we formed a lower low, and here we didn't reach the previous high, so here is a lower high. So we still wait for the market to give us a better sign. Here the market is pushing to the upside once again, then pulling to the downside, pushing up. So now what is happening here, we can see we had these higher highs, higher lows, and now suddenly the market moves more to the side, then it goes to the upside than previously here. So if you just draw once a line, you can see here the market pushes to the upside. If we here take the lows, and here suddenly the low is straight. So now what often happens after the market pushes to the upside, a consolidation pattern starts. So we move to the side, which might be an indicator that the market suddenly will break and then go to the downside. So initially we're looking for a break around this area to break this support line, and then maybe a retest, and then we can assume that the market will head to the downside. So the market is running to the side. Here we are still seeing the wicks at the support area. So for now the support area right here is still holding. So we let the market run, and suddenly we have here a huge break, and now we see the market continues to the downside. Here was the last support and resistance area, and here we had this huge red candlestick breaking even this area. So now we can kind of assume that the market will turn to the downside here if we let the market run. We see here now we are pulling back to retest this last support and resistance area, and to see whether we can get rejected here once again and whether the market will push to the downside. So we see now the market is retesting this area once, now here twice. So now we see the third retest, here the market breaking slightly above the lowest point of the support area, but now here we are targeting the previous highs at the support area. So now it is becoming a resistance area. So now we want to see rejections here. So we had here this huge red candlestick, which means now we can look for entries. So now we see the structure right here was broken. So now we can add our EMAs, which is here the 50 and 200 EMA, and we see here we had the cross between the 50 and 200 EMA. Now that the 50 EMA is trading below the 200 EMA, this is my first sign, or actually in this case my second sign, that the market might start turning bearish, since we had here this structure break of this support area. So now I'm actually looking here for trend lines and for the market to go to the downside. At the same time, what we see here, even though this high is slightly higher than this one, I can still assume that this is some kind of a double top with a slightly diverged higher high on the right side, so the right shoulder. So now I can go to the 3-minute chart. So on the 3-minute chart, then I can add the RSI and the MACD right around here, and here is my double top, and I can see here from this point, which is around here, to this point, we formed a lower high, and on the MACD as well. So this is an indicator that this was or could be a double top, and the market is going to the downside. Now if I zoom in, I can see here this fully closed candlestick breaking below the 50 EMA on the 3-minute chart. Here I had one as well, but again the market moved to the upside. Here I had a second one, and then the market pulled to the downside, which is another indicator for me that the market here might turn to the downside. So this here was the confluence number 4 or 5. At the same time, if I look now at the MACD, I can see after this candlestick we broke to the downside, and here the MACD suddenly broke below the 0 levels, and here the area is turning red, and the RSI here turning below the 50 levels. So these are my confluences that the market here will go even further to the downside. So now what I'm looking for is an entry. So now my entry might be on the 1-minute chart, on the 3-minute chart, or the 5-minute chart. Depends where I can find my best entry. So here on the 3-minute chart, this was my structure. We had the break. Here was my double top, and here this huge candlestick broke the last structure. Here we had a higher low, then a higher high, and here this support area was holding, but now I broke the last structure. So now here my red engulfing candlestick, but one candlestick is often not enough, so I'm now looking for a second one. And if I let the market run here I can see a next bearish candlestick which didn't close fully at the end, but it's still an indicator that the market will go to the downside. So now I'm looking here for the retest to this area. Here I can see now the market is reaching the 200 EMA, the MACD, the RSI trading in the negative levels here below the 50 and here below the 0 levels. So now I want the market here to come back to retest this structure right here and then look for an entry. So now we are getting close to the previous support and resistance area, which now should turn out to be a resistance area. Here I have kind of a rejection with this wick, so not 100% clear, but this might be here an indicator that the market will go to the downside, but this is not enough for me to enter, so I look and wait for the next candlesticks. Now at the same time, what I'm looking now for is here maybe a trend line where I see a 1, a 2 and a third touch, which would also give me a better opportunity to enter my trade. So I can see now here this wick broke above this one, so my trend line now starts here, and I can suddenly see here also 1 touch, 2 touch, and now this here could be the third touch. So now this looks like a better option that I might now enter the trade at some point, since here we are still at the previous support and resistance level. Now here these wicks indicate my highest point of now the resistance area, and here I can see even though we broke above the resistance area, we only broke with the wicks above it, so which means we closed below. So now this is still for me not a break to the upside. We are still below the resistance area and still retesting it. So now we just let the market run and look for an entry. So now I have a fully engulfing closed candlestick below the 50 EMA, or actually closing here, breaking the 50 EMA. At the same time I have my first touch, my second touch, and here my third touch with these wicks on the 3-minute chart. And now this fully engulfing candlestick, I had here 1 again, so this is 1 and 2. So here now I'm looking for the market, whether we will go slightly lower, then I will enter my trade. Here I have a break again to the downside, which looks now pretty bearish, so now I'm preparing for my entry somewhere around here, with my stop loss here slightly above the wick, and my target would be here much lower. So let's see what happens. So yeah, now I have the second engulfing candlestick right next to each other below the 50 EMA. So here the RSI trading below the 50 level, and here the MACD had this move to the upside, which means here are chances that the market will break and go to the downside. So now this here is my entry. I have now all the confluences that I need. I have here this double top with the divergence on the MACD and the RSI. So now the market here looks bearish. I have here now my 3-strike trend line. I have this support area which was broken, and here the retest. I have here the first engulfing candlestick breaking the 50 EMA. Here the RSI turning below the 50 levels after this close again, and the MACD here looks like it will go to the downside. So since we broke the last structure right around here, this is now where I will enter my short. So now I'm entering my short position right here at the close of this engulfing candlestick below the 50 EMA, and my close would be above the second candlestick right here, which closed here fully engulfing as well, breaking the 50 EMA, and which was right at my trend line here, my third touch. And my target, my first, would be the previous lows, so around here, but since this is pretty close, I'm looking for at least a 1 to 2. And if I zoom out a bit, here I had my structure to the upside, so I'm going to target the previous lows and the support areas right here at the 50 EMA. Depending on how the market will move, I will exit at some of these points. So now for the market, here, this was my entry. Now the market formed here again another fully engulfing candlestick close to the 200 EMA. So it looks like we will here go to the downside. So if I let the market run here, now we are retesting the area. We can see we came close to my stop loss here, slightly below the candlestick, because I still included the wick here for my stop loss. For now I'm still in the trade. So the next one was a push to the downside. Now moving again to the side, but here this wick right here, so the last one came again close to the support area, which now retested the lowest point right here. So let's see what happens. Now the market pushes here, breaking the 200 EMA, kind of a retest again, but here forming lower lows, lower highs. So let's see if we break here, then looks like this will continue to the downside somewhere around here. We should now see a break, and the market continues to break here, now slightly moving to the side at the 200 EMA, and here now we can see the market moves. So my first target would be 1 to 2, which is around here, and if I zoom out a bit, which here now in this case, here's my 1 to 2, would be roughly this support area. So my next target would be around here. So let's just quickly mark this area right around here. Then the next one around here, and the last one probably around here, since this here was around the cross of the 200 EMA. So this would be my last exit until I see the market breaks this area and completely drop to the downside. But for now, these are my targets. So here, so my first target would be here, this 1 to 2 area. Then here, this next support line around 1.3.5, 1.4. Here 1 to 5.5 exit, and the next or the last one here 1 to 7 risk reward ratio. So these are my targets. Now if we take a look what the market here is doing, we can see the market continues here, we break. So now at this point, once I broke the last or the first kind of entry or exit, my first target and the next support area, here now I will adjust my stop loss to a break even. Here I will partially take profits at 1 to 2 and let the market continue to run. So you can see here now the market is pulling back. Looks bearish, slightly sideways, bearish. So now we hit, not quite yet. Let's see what the market does. The market goes here now, kind of hit the highest point of this next support area, which is here a 1 to so here, which here would be a 1 to 3.78 risk reward target. So let's see what happens next. Market pulling to the upside, but now we're trading below the 200 EMA. Looks pretty bearish. So I'm just letting the market run and see what will happen here. So now we're breaking to the downside. So here we hit our next take profit, which was around here. So this was the 1 to 5 risk reward ratio, and we hit even the last one, which is here the 1 to 7 risk reward. So now I would exit, but since we had here this bearish move, we might even let the market continue to lower, but here this would be my take profit. So here we can see the market pulled all the way up to the upside. Here the consolidation pattern broke to the downside. So this is how I trade reversals, and this was today's video. So thanks for watching.